Hello and welcome to Fintech Insider Insights. I'm Ross Galagher, Venture Director at 11FS. In today's episode, we are discussing how fintech and financial services can manage the wealth of the future. We'll be taking a closer look at Gen Alpha and Beta, who they are, and what they expect from their banking services both now and into the future. How do our future wealth makers differ from boomers and millennials? What is our industry doing to empower these segments with the products, services, and knowledge to succeed? And we take a look into our crystal ball to think about what the future of banking may look like and how fintechs can adapt to meet the needs and expectations of future generations. To have this discussion with me, I'm very lucky to be joined by Louise Hill, CEO at GoHenry. Louise, thank you so much for joining us. Maybe for anyone that doesn't know, you can just give us a little recap on what GoHenry is all about.
Sure, thanks, Ross. Thank you for inviting me to join. GoHenry is a prepaid debit card and financial education app designed for kids aged 6 to 18 with a very simple mission to make every kid smart with money. We pioneered this category in financial education when we launched back in 2012, and we provide tools to help kids learn about money by earning, saving, spending responsibly, giving, and more, all with parental oversight. And we embed that with money missions, which are in-app gamified money lessons designed to educate children and promote better financial literacy.
Amazing. I mean, quite a simple mission, as you said, but I suppose easier said than done, right? And of course, such an important one. So, Louise, look, it's really great to have you. Really appreciate you jumping on and sharing your insights as well in this space. So we're also delighted to welcome Alpa Patel, a research and marketing professional, formerly the marketing lead at Ballooning Nest Eggs and head of market and user research at Kidz Central Station. Alpa, great to have you. Thanks for joining. Maybe you can tell us a little bit about some of the things you're working on at the moment.
Thank you, Ross, and hello to the Fintech Insider listeners. I'm Alpa Patel, and I'm thrilled to be here to speak on this topic, how fintech is addressing the needs of future generations. About me, I've spent about 2 decades in the world of data. Most recently, I worked at 2 fintech startups targeting the needs of the Gen Alpha demographic. Currently, I'm consulting in my role as a fintech visionary, I guess, and researching the transformation of the financial landscape driven by tech and innovation, especially as it impacts future generations.
Amazing. And I mean, similarly, so many great insights, I think, to share on this topic as well. So thank you so much for jumping on and sharing them. It is such an important topic. It's such an interesting topic. So I'm excited to dive in. And I suppose without any further ado, I guess in terms of starting and I suppose the principle of starting at the very beginning and where we are now, it'd be interesting, I suppose, just to have a look at, I suppose, where the industry's at right now in terms of serving some of those older demographics, but I suppose in parallel how we're starting to lay the foundations for the future. I suppose, Louise, it'd be interesting to come to you first, just because I know, obviously, you mentioned the fact that those younger demographics are a real target for GoHenry, but equally, I suppose there's the parent angle as well to the proposition. So it'd be interesting to understand a little bit around how you maybe strike that balance and serve those 2 very, very different demographics.
Yeah, it's certainly one of the challenges. GoHenry is best known for being a prepaid debit card for kids, but we're built by parents, for parents, and in conjunction with parents. And as you rightly said, the first customer, the person who signs up, is the parent. I think one of the biggest challenges for us is that we have 2 apps, so one for parents, different one for kids, and therefore 2 separate audiences. But actually, when you break that down, one of the things we tell people when they join us is we're not talking to 2 different audiences. We're actually talking to 4. Because we provide services to children from the age of 6 all the way through to 18. And if you think about the difference between a 6-year-old and their needs and an 18-year-old, they're vast. So we have 3 subsets within the child and teen audience. We look at age 6 to 10, 10 to 14, and 14 plus. And that means we have to have a really clear tone of voice, really clear communication channel that works for us. And it means we have to tweak the user journeys, the products, even the services in both apps to ensure that we appeal to those 4 different audiences.
I mean, it's an enormous challenge, and as you say, I suppose the characteristics probably evolve quite dramatically, as you say, as you move from being 6 through to sort of 16, 17, 18, and what they're probably looking for is quite different. I'm also fascinated in, you're designing, as you say, also for the parents. Do you think there is a real recognition on behalf of the parents that actually there is a real gap in that sort of child and young person banking space, and also a recognition, I suppose, that that's something that GoHenry specifically is solving for over and above what was already out there at the time?
Yeah, I think absolutely, and more. I mentioned briefly at the start that we launched in 2012, and the company came about because of the challenges I was finding in trying to make my children understand money in the way that they were starting to use money, and certainly in the way that I was using money. So many people have heard me tell this story, but my kids have both been lucky enough to be given iPods for either Christmas or birthday, I forget which now. And I'd given them the login to my iTunes account, and they were having a great time. They were clicking that download button, and I was trying to figure out how to teach them, make them understand that that was spending money. And of course, that money has to come from somewhere. And that was really where the thinking evolved from. The more parents I spoke to, the more people said, oh, good grief, my son has run up a bill on my eBay account, or my daughter's downloaded stars to move her up the levels in what computer game she's playing. And I realized lots of parents were having the same problem, and effectively we'd left kids behind. We were still giving them cash on a Saturday morning for their pocket money, and yet that was not the world we were operating in, nor was it the world that they would need to understand and be confident in by the time they reached adulthood. So even back then, the need was there. Fast forward, it's almost 11 years now, unbelievably. And I think parents are really aware of that. Shopping online is completely normal, and is something that children do from quite a young age. Certainly using gaming stations or playing games that involve downloads or paying for things, again, is used by hundreds and hundreds of children every day. And if you think about the way that adult money use is evolving, we need to prepare the younger generation, all of those Gen Z, Gen Alpha, Gen Betas. We need to make sure we're preparing them for the onslaught of all that choice as they reach adulthood.
I just find that such a fascinating insight, because as you quite rightly say, I think financial education at a young age has always been lacking. And Alpa, I know this is a demographic, this younger demographic is one that you've looked at quite closely. And I suppose you recognize what Louise is saying about in a digital context, there's probably an even bigger gap, because you don't have that physical transaction, that handing over of cash, and actually trying to associate, as Louise was saying, clicking the button with money being spent. There's probably quite a bit of work to be done there still.
There is. And what we find is that these older generations, we didn't have any financial learning given to us from our parents. And so one of the most important things for us is this immediate focus on financial literacy and adaptability. We don't know what their futures will be. And therefore, it's very important to us to start at this very young age to give them this learning, so that they don't come into adulthood like many of us did without having any idea of how to take care of our own finances or anything, or investments.
Yeah, one thing that I really believe is that it's not enough to say, oh, here's a current account, and oh, well, we've got direct debits or standing orders, so actually you can pay your bills. The really valuable stuff on top is, how do you help me manage my leftover spend through to the end of the month? How do you help me optimize that spend? How do you help me save towards the things that are important to me? And I think that's the bit for me that's always been lacking. And I think without that, you're sort of leaving people to fend for themselves and sort of figure it out, I suppose, ultimately, as they go. And Louise, part of I suppose why I bring this up is I think actually picking up on Alpa's point, if you give people the right tools, the right intelligent services, and show them how to use them and how to use them to their advantage from a young age, it's not just a skill, it's a real advantage. You're really empowering people to go on and sort of like achieve things and do quite well from there. So it's not just for me something that is a nice to have. It's something that is really, really essential to how people go on and live their lives.
I think to me it's a fundamental life skill. There's no getting away from it. You would really struggle to operate in society without money, and money has changed dramatically in the last 30 years. I was going to say 50, but it's not 50 years. It's the last 30 years, and even more so in the last 10 years. And so providing those tools to youngsters, and I said we start from the age of 6. The reason for that, there's a very strong piece of research from Cambridge University that was commissioned by the Money and Pensions Service that showed that children form their money habits as young as 7 years old, and that those money habits then have repercussions, steer decisions that they make for the rest of their lives, so really impact their financial outcomes for the rest of their lives. It's critical to start young, and giving parents the tools, because they're the most obvious route into children that age, giving parents the tools so that they can give their kids GoHenry, because obviously I think that's the best solution, but giving them the tools so that money is accessible, it's explained in language that makes sense to the specific age group, and that they are encouraged to learn about earning and saving, and spending responsibly, learning the difference between needs and wants, learning to budget, learning to save up for bigger goals that they want to achieve. All of those things are absolutely critical life skills, and I often talk about it. I link it to swimming, learning to swim. You don't throw your child in the deep end of a swimming pool and just hope that they're going to swim. You normally, they have some lessons, or you give them some kind of aids like armbands or a ring or something, so that they can learn to swim in a safe and protected way until they're ready to do it by themselves and independently. And you give them those aids so that they become confident and learn to do it. And I think financial literacy, financial education is exactly the same principle. I'm a huge believer in learning by doing. And that was one of the reasons that when we started to build GoHenry, it was key to me that we actually gave kids a debit card, and they had an account that their money could go into, and that they could take decisions on spending or saving, or learn about giving a little bit to charity every month or every week, or just one off, but learn about those things for themselves, make the decisions themselves, all within, we call it parental oversight, but the parent can set limits that they are happy with for their child to operate within, so that it's a safe environment. But learning sometimes by making small mistakes. Our previous CEO, I remember he came up with this phrase once when being interviewed about better to make a £20 mistake when you're 7 than a £2,000 mistake when you're 27. And it's very true. So learning by the occasional mistake, by buying something you want today, but then realizing you haven't got enough money to do something you really, really wanted to do tomorrow, and you've got to wait and save up. Those are great life lessons, and really good to earn really good to learn when you're at a much younger age, and it can be done in a safe environment.
Especially when you say that people's relationship with money and money habits and behaviors have already sort of really been shaped by the age of 7. Then I think that whole like learning by doing thing just comes into sharp focus in terms of why that's so important. And also I find what you said about the learning to swim analogy really powerful, because I think a lot of people probably do feel like they just get thrown into the deep end. Something happens, they get their first part-time job, suddenly they're earning money and they just don't know what to do with it, whatever that looks like for them. Alpa, do you think that some of the fact that you've got a lot of everything now is sort of moving digital, isn't it? And of course, with that comes potential for engaging these types of audiences in a different way. Do you think that offers a real opportunity to address challenges around financial literacy, financial education in a new way and potentially more effective?
It is much more effective. I mean, Gen Alpha and generations beyond are what we call digital natives. So they're growing up completely immersed in the internet, AI, all of these products, and nothing is new to them. It is their life. And so the way to reach them is products like GoHenry and other apps specifically targeted towards them, which are looking to give them that early exposure that Louise was talking about, because these are their formative years, and what they learn now and the products and services that they see now will significantly influence their expectations for the future. And financial institutions that adapt to this and recognize these expectations now have a competitive advantage in serving this generation as a transition to the future wealth holders.
Yeah, I think that's it. I think and I'd argue that the industry, in terms of the financial services industry, is probably starting now finally to take that responsibility quite seriously. And Louise mentioned the parents are also, really conscious around like how can they pass these skills, how can they teach these skills on to their children. And I wonder, Alpa, how much should we also be thinking about learning this sort of stuff like in school from a young age? Because I always say, either I was maybe out sick that day, but no one ever taught me how to save towards life events or anything like that.
I think it's a responsibility for these companies, if you're even entering this sector, to have training and education as a part of your business model, because banks are here to serve their customer and build trust and so I think a lot of financial services companies, fintechs, are actively engaged in initiatives focused on financial education, responsible money management, digital literacy, and they even tackle some of the values that matter a lot to this generation, such as sustainability, the climate, equity, diversity. And I do also agree that it should be part of our public education, as you mentioned, that financial literacy should be one of our core classes. We shouldn't graduate college and have no idea where to go from there. Get our first job, which who knows what they'll be for our Gen Alphas, but we don't have an idea of how to then budget ourselves. And I saw that with a lot of my friends graduating college, mismanagement of their funds. So I think it's very important that we start to incorporate that into the public school curriculum.
I would absolutely echo that, Alpa. I've talked for a long time about collaboration. Our mission statement, I said earlier, is to make every kid smart with money, and there is a reason that the word "every" is in there. If we are really going to reach every child in the UK, and going back to that Cambridge University study, when they are 6, 7, 8, that means in primary school, then we really need to come together and collaborate to make that happen. So I agree with Alpa completely. There is a role for financial services companies to do that and to make sure that they're embedding that education and information within their services. But I do think also there is a role for government to play. There's a role for schools, teachers to play, and for parents, and in fact wider industry. If we really want to make this happen, we can come together to make effective financial literacy a key subject in every school.
I completely agree. I think as well, by not doing that and by not addressing it in schools or through financial services apps where it's regulated and safe, some of the stats that we've seen around people that go to social media like TikTok, etc., to get these types of this type of advice, where it's not regulated, it's not necessarily safe. Alpa, I guess this is something that you've seen and something that potentially could pose a risk.
I mean, I do think social media can be a valuable source of information and community for this generation. That's where they connect and meet people, since they're not really meeting people in real life. They like they like to be online. But it does come with a lot of risk, as you said, when it comes to financial advice, because you'll be getting lack of expertise, on TikTok, misinformation and bias, speculation, financial scams. And there's also a lot of peer pressure that this generation faces. So to mitigate this, I think what we just talked about, we have to invest in financial education literacy, starting with our public school systems, as Louise mentioned, the government, which has a broad, larger infrastructure and broader audience, so they can reach school kids, college kids, and help in that efforts. But we also need to teach our kids, as Louise also mentioned, our parents are very important. We need to teach our kids to verify sources, and to seek information from a variety of sources, books, educational websites, certified planners. And we also have to tell them to be cautious, because if it seems too good to be true, it probably is. And they need to avoid impulsive decisions. It also brings up the topic of cybersecurity, which banks and fintechs need to heavily invest in. They need to educate their customers online, knowing that a lot of them are this younger audience. And we need fraud detection, prevention technologies in addition.
And I think I would add to that. I mentioned earlier on that we have a series of what we call money missions within GoHenry, and they're age and stage targeted. So there's the 6 to 10, 10 to 14, and 14 plus money missions, and they're in-app gamified money lessons. They're little Quizlets, little videos, little learning moments. That's a weird phrase, but opportunities for the child or the teenager to learn about various money skills, everything from cybersecurity to shopping safe, taking that through to shopping safely online, to understanding interest and credit cards, to understanding what a payslip looks like and what all those entries on your payslip might be, all those things that get taken off it. All of those things. What we found when we started to introduce those, interestingly, was parents coming to us. One lady I ended up speaking to, who said her son had just explained her payslip to her, and it was the first time in her life that she'd actually understood what each of the deductions on her payslip were. And we keep hearing that their child's explained to them APR, AER, what the differences are. That's incredibly powerful. And earlier this year, after a long time working with them and talking to them, we actually came together joined forces with an American company called Acorns, who operate at the moment just in the US, but whose vision is that investing should be something that is available to everybody, and therefore have a whole suite of products targeted at adults, in making investing, demystifying it, making it simple to understand, making it easy to access. I think they started originally with roundups. They have dollar a day solutions. Their whole concept is around starting small. Think about the acorns name and the acorns imagery. It's all about planting that acorn, starting small, keeping going, regularly investing, and ultimately building your mighty oak. And that has started to enable us to address some of those learning opportunities, I suppose, but those education opportunities with the parents as well as with the children. So today in our US operation, GoHenry is now part of the Acorns premium tier, and all of Acorns premium tier customers now have free access within that tier to GoHenry by Acorns as we position it over there. And that means not only are the GoHenry kids learning and gaining access to that kind of easy to understand financial information, but also their parents as well, which is something, I've been thrilled to be able to work with the team at Acorns to bring to life this year.
Yeah, I'll bet. And I think, to be able to invest in the safe way that you just described, you need those foundational behaviors and habits already embedded, because, you need to be in a certain financial situation before you can really consider investing, and how do you invest in a safe and sustainable way. And I would argue, Louise, as well, that the young kid explaining the pay slip to his mum is, I would say, one of the great testimonials for what you guys do. And a real sort of indication of success. I'm going to take us just to a quick break. Coming up, we take a look ahead to what fintechs and financial services will look like in the future, and how they can support the needs of future wealth makers. So don't go anywhere.
A lot of you know 11FS for our chart-topping podcasts, our events, videos, reports, and a bunch of other cool stuff that we do. But what a lot of you don't know is that this is just all our side hustle. We do so much more than that. At 11FS Ventures, we're partnering with ambitious businesses around the world to design, build, and launch truly digital financial services. We are building banks, shaping new propositions, and growing existing offerings that change the fabric of financial services. And our design, research, strategy and engineering experts are working to improve your customers' relationship with money. To find out a little bit more, check us out at 11fs.com/ventures.
Hello and welcome,
LFG people,
to Fintech Insider,
Blockchain Insider,
11FS Spotlight,
11FS Explores,
Open Mic Night,
After Dark. Through our podcasts, videos, newsletters, and live events, we have a direct line to a truly global fintech community. So if you're looking to sponsor and collaborate on content that connects with everybody from fintech beginners to the biggest VCs, then chat to our team at sponsors@11fs.com or visit 11fs.com to find out more.
Long live the community.
All right, welcome back. In this part of the podcast, we are taking a look ahead to understand what the needs of future wealth makers might look like, and what fintechs can do to support this. So, Alpa, I know you've looked into this younger demographic. One of the first things that springs to mind for me is how typically banking has been organized around quite, I suppose, a set series of life events. So typically things like saving for college, saving to buy a house, saving for a wedding, whatever those might be. I wonder, how much does that apply to these younger demographics? Do they still subscribe to that same sort of laid out traditional path, or are they more open to different types of experiences, and how does that translate through to what they need from financial services?
Right. I think it's not that these life events are unimportant to them. It's more that they view them differently. I think that older generations, boomers, Gen X, saw them as a step-to-step goals, whereas the younger Gen Alphas are seeing them more as peripheral goals. They're part of their life. They're much more involved in managing their financial future from an earlier age than the older generations. And they also value things such as sustainability, equity, technology. And banks will need to adapt to this and innovate their products and services, especially in terms of tackling the values that they want. And I thought of some examples. For example, in college funds, the rising cost of education and also the evolving landscape of learning, such as AI or online courses and certifications, as well as the shift to alternative types of career paths, may reshape the whole idea and importance of education in general. So will we need the same types of college funds? Probably not. But what banks could do, they could offer more flexible education saving accounts that are not not just limited to college tuition, but also to these alternative learning paths. They could offer tax advantage accounts to encourage college goals. They could offer financial literacy resources, as we talked about, or green sustainable investments, which is a value that they really care about. All of this provides incentives to the future customers, but are different from what it is that we've been growing up in. And the other example I thought was mortgages. The whole concept of home ownership is undergoing changes. Boomers wanted home ownership, but Gen Alphas are looking at, they're looking at the housing market, the inventory, the urbanization, and they like flexible living arrangements. So future generations might lean more towards renting or shared housing models. And so in reaction to this trend, banks could offer shorter-term mortgages with flexible terms or introduce shared equity home ownership models. Also, simplifying the whole mortgage application process, which would be very helpful, such as offering online pre-approval, having all your documents on there. I mean, we're moving towards that. Even in the last time we remortgaged, it was a much easier process, and that would definitely appeal to the tech-savvy Gen Alpha generation.
Yeah, I like how you started off really aspirational, and then saying, well, actually, if we could just solve this one small problem, which is how complicated mortgage applications are, and I could not agree with you more.
I was going to say, aren't they just?
Yeah. They're so complicated, honestly. But Louise, I think Alpa makes a really good point. When I suppose you look across the landscape of financial services, things are changing really rapidly across the board, aren't they?
They are, and I think the generations that we're talking about, Gen Z, Gen Alpha, they are also changing, and their behaviors with money are changing. We've now been in business for coming up for 12 years, and when we look back at the first cohorts, the first couple of years, and how the young people were behaving with money and the decisions that they were taking with their money then, and then we look at how they're acting now, we see real societal shifts, and that's amazing. And they shift year on year. It's we've been producing the Youth Economy Report every year for about the past 5 years, and the most recent one we released a few months ago now, and it looked at the behaviours of 750,000 young people, so between the ages of 6 and 18, who'd been using GoHenry at the start of the year and were still actively using GoHenry at the end of the year, and how some of those behaviours had shifted from the previous year specifically, and then before that. And if you think about what was going on in the macroeconomic environment at the same time, I mean, that was as the cost of living crisis started, that term started to be heard in the media. And obviously those things were being discussed. They were popping up on teenagers' phones all the time. They were on the news, on the television. They were being discussed in homes around the country. And what we saw was children and teenagers really starting to save an awful lot more money, really markedly so. So the comparison to the previous year was 145% higher savings, and that quite clearly in a response to the pressure that they were seeing their parents and families and hearing on the media other families going through. And when we inquired into that and looked at why they were saving and what they were saving for, or how they were thinking about the cost of living crisis, what came through incredibly strongly, we called it in an article we put out, is this the end of the bank of mum and dad? Because I think for a long time in the media we've heard the bank of mum and dad. Mum and dad are having to help kids fund their house deposit, or mum and dad are having to pay for university education or weddings. What came through very, very strongly was a real shift in expectations, and kids, and particularly teenagers, saying they really do not expect, I think it was 63% do not expect their parents to help with a deposit for a house. And a very similar figure, 60% do not expect their parents to help with a wedding. And slightly less, I think it was 54%, do not expect them to help with further education, be that university or apprenticeship or something like that. So, kids and teens, they're very sensitive to what's going on in the environment around them. They soak that up. As you would expect, they respond. And so there are real behavior shifts happening in how young people use money. And also how we see them. Alpa made the point about value-driven services, so socially conscious purposes, green investments, or green retailers producing green products. Children are voting with their feet, and we see that direction very, very strongly, that they are making those choices. And they're used to it being immediate and digital and slick. And if it isn't, they go somewhere else. So that whole legacy of, when I opened my first bank account, it was with NatWest because that's where my dad and my mum banked. My dad took me in and we opened a bank account. And it was, I now work in financial services. So I moved away to First Direct when they opened because that was more convenient for me. And then guess what? I moved away to Monzo when Monzo started because that was more suitable for me. But those behaviors in the generations that we're talking about, Gen Z, Gen Alpha, Gen Beta, they vote with their feet. They vote with their feet.
Yeah, there's a couple of things that you said there that I want to pick up on. I agree with you that I think that behavior of the ceremonial going into the bank with your parents when you turn 16 or whatever it is to open an account in the same bank that I think we are moving away from that, and it's not necessarily a bad thing. I think the other thing that's really interesting is obviously what you said about the values, and I think that is something that we've touched on or at least skirted over a couple of times. But I think it's no surprise, it's no secret that these younger demographics are much more values driven, as you say, absolutely voting with their feet. And then the other really interesting thing, Louise, that you said was how tuned in or how plugged in they are to their environment. And Alpa, I'm interested to get your thoughts on, I suppose, well, actually, so Louise, I think one really interesting thing, though, is I know you were, in terms of the study that you mentioned, you were looking at regular GoHenry users. And so it shows that they had the understanding and the skills to be able to adapt their financial behavior to respond, which I think is really great. And ultimately is what we're talking about, right? But then, Alpa, I'm interested in, I suppose, the role of social media, right? And not just in terms of shaping their expectations around like experience and UX and everything else. But this younger demographic, they're always on their phone and they are constantly consuming content. And so, I suppose we tend to think of them as children, but the reality is that they are very plugged into what's going on in terms of current affairs, etc.
Yes, actually, I have two young kids, and they do get a lot of their news, and I'm actually surprised at some of the things that they know that are happening in the world. So they are getting most of their content, not only social media, but from their friends, from a lot of those communication apps, Twitch, Discord, where they're having these very serious discussions that, which, our older generations, we didn't have these types of discussions. We were very sheltered. So we are seeing quite a bit of maturity in them, and so it's a reason why they're able to handle adopting to a lot of these fintechs and early neobanks and these technologies, that they're very primed to just go online and start using it themselves. And as Louise said, they teach us. They come back and teach their parents, which is why it's such it's an amazing thing to keep up with them, because when we teach this Gen Alpha group, we're actually also getting to the millennials and the Gen X and the boomers and teaching them to come to our services online. So we're actually gaining a segment that we didn't have before because they just didn't know how to get there.
It's such an interesting point what you said about that access to information and being able to, I suppose, process and understand that information versus generations previously being more sheltered. And I suppose, I mean, Louise, I don't know if you think this, but I suppose for me, that kind of suggests that they're ripe for the financial education piece. They're going out, they're seeking this information, they want to understand it. But then I suppose it also places more of a responsibility on actually giving them access to the right information and doing it in a safe way.
I think it does. And while remembering all the time that it needs to be real time and it needs to be personalized, because they expect that as well. That's what they've grown up with the services they interact with on their phones. And I was talking on a panel a couple of months ago, and with some of the high street bank representatives, and I said, "Watch out, they're coming." And at the time, people laughed, but I actually mean that quite seriously. They have very different expectations. They consume information in a different way at a different rate, and they expect it to be there. And I think that's a challenge to all of us. It's a challenge to GoHenry to keep innovating and keep providing that and building on that. But it's also a challenge to all of the adult financial service providers out there to be ready for those expectations and to meet those expectations. And actually that will shift the paradigm for everybody, because it will improve services for the older generations as well.
I completely agree. I mean, I think the other interesting thing to consider is, we're talking about, if we take Gen Alpha as an example, it's still a very young demographic. And I think, to your point about they're coming, not necessarily people that the demographic that the vast majority are really considering as serious participants in the financial system right now. I think if you're going to be really, really, really blunt about it. But it feels like, to everything that you just said about everything from how they consume information to how they think about products and services through like a values lens and all of that sort of stuff. And Alpa, this is probably something you recognize, but the potential for transformation is pretty fundamental, I'd say.
Right. They're primed and ready. They're growing up in a world with like heightened awareness, not only of digital, but also social, environmental. They're global, and they want all of these values to be addressed in their brands that they're banking with, or any brands. And so I think for fintechs and traditional banks, they need to recognize that maybe they're just turning 13 this year. That's true, but then following them will be Gen Beta, and they are sort of the main cohort we should be looking at, because they have great influence over their parents, and their parents are also giving them their brand influences. And so they will be falling in the tracks of, they're called mini millennials for a reason. So they're highly influenced by their parents. And so it's sort of a tandem relationship here. You need to both target millennial parents and Gen Alpha kids at the same time. So they are, although they're young, they're still a very important cohort to be looking at in our marketing materials.
I really like the point that you made about, it almost feels like we have to stop thinking about financial services in isolation and actually see it as part of a much bigger whole. Louise, do you think, I mean, with so many drivers from lots of different directions, technological, social, everything that Alpa just mentioned, are we even going to recognize financial services in a few years from now?
That's a really good question. We were talking with our team earlier in the week about AI and just the opportunities that unlocks to provide really bespoke, really personalized information and offerings to people. And that is, it's new, it's exciting, it's frightening as well in some ways, but the opportunities that are there are enormous. If you think about open banking, if you think about all sorts of other technologies that are coming online, I think financial services can't help but be transformed over the next few years. I could say it already has been. If you look back 5 years, we've come a huge way. We still get called disruptors, fintechs, but think about Apple Pay and where that's moved from and to in the past 5 years. Think about Revolut, Adyen, these companies that have come in that are not traditional banks but offer this massive range of services. Yeah, it really makes me question, well, not question, it makes me believe that things will look very, very different in 10 years' time and probably in 5 years' time. Things are moving so quickly.
Agree, but I think I go back to that word that you mentioned around opportunity, and I'm quite optimistic about where I completely agree with you. I mean, we've already come so far, but where we can sort of continue to innovate and go from here. And I guess, Alpa, it feels, I mean, I was being quite flippant a moment ago when I said that lots of the big players mightn't even be thinking about the demographics that we're talking about, but how important is it that they are, and that they start to think about these demographics and really think about designing financial services tailored to them that meet their needs?
The transformation of the banking industry is a very gradual process. And, there's tech advancement, regulatory shifts, global events. But Gen Alpha right now is kind of the biggest trigger or a pivot for how banking providers are doing business, because they're motivating change in the way these technologies are being developed. And it's being driven definitely by their parents. This generation influence can drive the adoption of these digital financial tools. But we do need to adopt to what we were talking about, the immediate way they want information delivered, the many different platforms they want changes to these their products to be delivered. And we see that already many fintechs are starting with this, their API-driven cloud solutions. They're adapting to how the younger generation wants to view their content.
Yeah, I completely agree. Just for the sake of ending on I suppose, a sort of crystal ball prognostication, Louise, where do you think the industry sort of goes from here? And don't worry, we won't hold you to it.
Come back and listen to this again in 5 years' time and see if I got any of it right. I use the word personalization. I've used that a lot during this conversation, and real time. I think financial services will become very, very much more personalized. I think the level of interaction that individuals can have with it will become more frequent. And I think that the kind of vision of open banking, as that really embeds into becoming the norm, we will get to a position where I can look on my phone and I can see where all my money is, and I can see bespoke advice to me for how I can optimize that money, where I put it, how I choose to demonstrate my values with the choices that I make. I think all that advice will be there in one place for me.
Yeah, it's a really attractive view of the future, and one that I certainly hope we get right. Well, look, we have absolutely flown through this show. I've really enjoyed the conversation, the discussion. Thank you both so much for joining. Where can people find out a little bit more about both of you and your companies as well? Shall we start with you, maybe, Louise?
Yes, find out more at GoHenry.com. And for US listeners, sadly not available in the UK yet, at acorns.com.
Excellent. How about you, Alpa?
You can find me on LinkedIn, Alpa Patel, or also on Twitter at Alpatella.
Excellent. And as ever, you can find me at Ross Galagher 07. And thank you for listening. If you like what you've heard, please do follow our podcast and don't forget to leave us a review. It really does help us to make the show better, and it also helps other people to find it. As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider, or email podcasts@11fs.com. Thanks very much and goodbye.